All right. Well, it looks like we got a small group today, Oscar. What I've noticed is most people are now just using the live stream to get the big scoop, which is daily. So what I'll do today, since it's just you and I'll go over a summary of the live stream and then definitely recommend you watch that live stream. Oh, we got Karen in. Hey, Karen, how's it going?
Hey, yeah, well, I made it through the storm.
Yeah, you survived, huh?
Yeah, survived a little flooding up on the river, but yeah, so far so good.
Oh,
Thanks.
good. That's good to hear. Yeah, it looks like the whole area lucked out a good bit from what I've heard.
Oh, big
Oh,
time.
yeah.
Are you over there too, Oscar?
I'm in the Miami, South Florida area.
Oh boy, you're ready to get rocked, huh?
Oh yeah.
Yeah, you guys were a little way too hysterical in South Florida, let me just tell you.
Well, they've got good experience at.
Oh, I know. I used to live down there, so I'm very well aware. But I mean, it wasn't, I felt like it's not coming down there, but whatever. I guess, I know they get a little bit over the top, but for good reason.
Cool. Well, hey, we have a smaller group today. What I've noticed is people are starting to really jump into that live stream, which is nice because you get access to me immediately after the trade alerts, and I do about a 1 hour presentation. So I'm going to summarize what I covered today, and then highly recommend you guys definitely watch the live stream if you've missed it.
Will do.
So the big news is overnight, the Hong Kong extradition bill was removed, which caused a sell-off in bonds, which was great because we were bearish on the TLT play, and it caused a spike in equities, which was great because we're long equities, and it managed to do this without very much of a sell-off on GDX, which was our other big play. So everything's working out very well. Some important data that is very interesting is in the live stream doc today is just incredible. I'll show you guys. Well, first of all, here's some American corporations that have negative yielding debt denominated in other currencies, just showing how absurd the bond market's getting. But if we go up a little higher, here's a timeline of the trade war, which is interesting. Again, in the YouTube video in the description box, we have these links. But here's what I want to show you guys. Here's all the countries that have been lowering rates and probably will soon be buying up government debt. It's just insane. The whole world is currently lowering interest rates at almost every central bank. And I believe the next step is they're going to start helping all these bond speculators exit. So the bond speculators represent some $17 trillion that are in negative yielding debt. And it's just too much debt for them to sell. If these big banks that have financed these bond positions were to try to sell, it would most likely crash the bonds on all of these different negative yielding bonds. So they know they can't sell. So instead, they continue to drive the bond prices higher and higher, demanding that the central banks essentially lower the rates and then finally come in with QE. So once these central banks agree or announce that they're going to start monetizing the debt, that's when I suspect these big banks who have been buying these negative yielding bonds will slowly start to exit those positions. And that's when I think we could see a huge melt up in equity prices, which is why we're currently long the stocks and have a bearish trade on the bonds. So I think we have potentially a 2 to 3 month period of ease in the trade war, which I believe will help the SPY ETF travel to above 300. So we're currently using option callers that are very loose. Here's our trade alert today. So you can see I'm not trying to generate return right now on the options. We're just using that as protection against the downside. We're letting the SPY just appreciate on its own. Once we get above 300, I think it'll probably have trouble going much higher than 315, 320. without a trade war resolution. And I don't think a full comprehensive trade war resolution is possible. But what I do think could potentially happen, and I'll go to this trade war timeline. What I do think could happen is the Chinese agreed to buy agricultural products, and I think that'd be enough to get Trump to cave in on at least a few items so that both parties can come out looking strong to their citizens. So that would be something that would make me scared of our gold position and also negative on our bond position, but very aggressive in our equities position and potentially help us get past this danger zone above 300. I think it's very hard for the SPY to climb with the outlook that the trade war is just going to escalate. So that's the big thing I continue to look for, is signs that the Chinese will simply buy agricultural products. Now, in the same breath, if they don't buy farm products, I suspect sometime around December 15th, when the next round of tariffs hit, that we could see either side starting to poke at one another. And it may be China does some small move to retaliate against the new tariffs, and then that aggravates Trump to probably, I'm guessing his next big move would be actually to put the sanctions on Huawei into effect, which could mean getting rid of Android, the Google operating system, which would cripple their phone products, as well as cutting them off from all the processing chips, which are all developed in the US. So I think that could potentially be the next big headline risk for equities and the next big push up in bond prices. So those are kind of the two potential outcomes I see happening for the remainder of the year. So our allocation strategy remains the same. We still have the half equities, half bond, and then 10% in gold strategy as of current. So here's the trade war. We can see it's quite clear the Chinese don't want to really do anything. They haven't done anything whatsoever at all in any shape or form to alleviate the trade war escalation. So perhaps they do really want to try to escalate it and potentially get a new president in 2020 who might be more inclined to do a deal that China likes. And so yeah, that's our general outlook for the Tuesday trade. We're currently in Facebook. I like Facebook because it is somewhat insulated from the US-China trade war. Their products are all banned in China, so being in a trade war, there's not much pain directly that China can impose on Facebook. Now, once we get to 300 on the SPY, I do expect to rotate into Microsoft, which is also somewhat insulated from the China war. So once we get to 300 on the SPY, I expect our Tuesday trade to probably rotate out of Facebook into the SPY. I would suspect Facebook will climb up towards 200 by the time SPY is around 300, maybe even break up above that. Microsoft I like because it's less volatile when the market does sell off, which may be unexpected. We have our bonds to catch a rally, but Microsoft will sell off a lot less than most of these other companies. So expect to rotate the Tuesday trade into Microsoft as long as we have everything coming in together, which means no more trade war escalations for September, no hawkish surprise from the Fed. So I do expect they will drop rates, maybe 25 basis points. 50 I'd be a little surprised with. I think they're going to slowly pull this off as gradually as they can. So as long as these events are happening in the right light, expect Facebook till we get to 300 on the SPY, rotate to Microsoft from probably 300 to 315 range. Once we get to 310 to 315 on the SPY, that's when I'm going to suspect Trump's going to get brave again and start poking China as the clock is ticking. His opportunity to close a deal before the election period is quickly evaporating, as well as the strength of the U.S. economy. It's still super strong while the rest of the world's struggling. And that's what's causing all this money to flood into U.S. products. So kind of the outlook on that one. In terms of our buy and hold portfolio, currently 10% allocation in gold. But if you want to spicing it up, what I've actually done is I have 7.5 in GDX, and then 1.25 in Bitcoin, and 1.25 in Ethereum. And wow, Ethereum had a $10 rise, I think, just over the last day. So I like Ethereum and Bitcoin, not because I think it's going to overtake the dollar. It's more like the rebel without a cause, the black market currency. There's plenty of reasons in the world to want to avoid your government's capital restrictions, especially in China, and to look for places to hide value. And so Bitcoin and Ethereum do a very good job at providing that, also with the idea of massive potential appreciation in the asset. So right now, the market cap of gold is something like $6 trillion. U.S. stock market's more like 40 trillion. The total bond market's something like $240 trillion. We go to Bitcoin, its market cap's something like 200 billion, and Ethereum's like 20 billion. So when you put that into perspective, we can understand why we only want a 1.25% position in something like Bitcoin and Ethereum, as those can be easily manipulated in our favor or against our favor, and why I really like gold. Now, if you did want to have something similar to this but stay away from crypto, you could replace the Bitcoin and Ethereum with the SIVET. Murray's here. Hey, Murray, how's it going? Let's see, Murray, I unmuted you if you want to say hi. But your mic is muted right now.
Yes, I'm late getting in. Sorry about that.
No worries, Murray. We have a little bit smaller group on the webinars now just because the live stream provides so much content and the live chat. So a little more personal group today. Did you catch the live stream?
Yes, I did. I just finished catching it. Yes.
Excellent. Okay, cool. Any particular comments or questions? I know you're pretty
No, just about the TLT puts and calls.
So yeah, that you know,
Whether we
that one actually went in our favor today. I was getting a little nervous there on that one.
Oh, it did? Okay, I missed that.
Yeah, so well, let's see what we're trading at right now.
147.50.
147.50. So yeah, I think we need a little bit of a sell-off tomorrow to get it back into the money zone. Let me just pull up that trade. We'll see where we're at on that. But yeah, my general idea is that we're going to have a period of peace in the trade war that will be short-lived. This should provide a little bit of a slowdown in the bond prices appreciating, although it's just been a nonstop. This is just completely crazy how fast this has been rallying. Yeah, let's take a look at that Thursday play from last week, see how we're shaping up on that one. So yeah, really there's two really important news wires to pay attention to. So the de-escalation in Hong Kong certainly supports our exact setup right now. But I have two things I'm looking for. Number one, will China buy farming products? If so, I'd be very scared of the bond prices and the gold prices in the short term, and want to increase risk on our equities positions. Now, if they don't buy farm goods, I would suspect the next move from the U.S. is to actually make the sanctions that they've planned on Huawei go into effect, which would potentially put them out of business. Some people are saying in less than 90 days. And
Wow.
that would be a dramatic escalation in the trade war. So very, very exciting times. And it's funny that it could be as simple as the Chinese either buying food or not buying food. That dramatically changes the outcome. So let's take a look at All right. So yeah, we need this to go down another dollar to get to break even, or less than $1 to get to break even, and a little lower to generate a profit on that TLT trade. At 147, we're down about $100 a contract at 147.50 currently. And that was getting a little scarier yesterday because it was breaching 148. So yeah, any specific questions on that TLT trade, Murray?
No, I just was getting nervous there yesterday.
Yeah, certainly. So yeah, it's quite remarkable. So the big thing here is just this dollar continues to remain so strong in the face of the Fed becoming dovish and the government creating record deficits. So it just shows you how poor the rest of the world is performing right now. So my expectation is that this bond rally is not going to give in until they officially announce QE. Because if you think about who actually buys these bonds, it's primarily big banks who are using it as a hedge against their equities portfolio. And they know if things go haywire, the bonds should go up in value and eventually get bailed out by the central banks of each government. So they're banking on that event to exit these bond positions and to hedge their long equity portfolio. So I think that essentially, these central bankers know that they have to get this huge speculation out of the bond market. It's performing exactly the opposite of it should. We're paying people to borrow money who have bad credit, like Germany, because they're facing a recession, which makes absolutely no sense. So they have to provide the support to allow all these banks to get out of these positions. And that, I believe, could spur a tremendous rally in equities. So, that was the first time we bet down on the TLT this entire year. And I think we have to just remain long the bonds and the stocks because of this big macro pictures that the U.S. is the last safe place to invest. So we're just seeing all the money flood into the only positive outlet for yield.
So Jason, question. Obviously, the yield has to go down for TLT to continue to go up. How low do you see the yield going?
I think that that's a great question. I think what's going to happen is the Fed is going to peg the rates and allow everyone to exit. And at some point, that's what's going to happen. So trying to predict, I don't think it's going to go, I don't think the federal fund, or at least I don't think it's going to go sub-zero. I don't think the bond market can operate if there's no outlet for positive yield. So Daniel D. Martina used to work for the Fed and has some pretty good macro voice pieces on this. And essentially her basic premise is that the only way this negative yielding debt can operate is for it to have an outlet to hedge with a positive yield. So we'll see how low it can go. I think as long as the trade war is escalating, this can gradually drive the bond market higher. So I definitely regret having put the bearish bet on the TLT last week. We may squeak out a profit or a tiny loss this week, but I think it's quite clear that we need to keep both positions relatively wide in terms of the options so that they can both go up together and not get caught off guard with the big picture, which is really this. Here's all the countries and their actions with their rates just in primarily the last 60 days. You can see every single country, because China is devaluing their currency, they have to offset the exchange rate as one of their key trading partners. So they're doing this, but it makes their US denominated debt more expensive. So how do they pay for the debt? Well, they have to print money. That's creating a bigger and bigger money supply. at the same time where the U.S. is being reasonably responsible with its fiscal policy. And so that is what I think is the big picture that's just causing everything to go up. Dollars going up, bond market in the U.S. is going up, and also U.S. equities are near all-time highs, whereas every other stock market around the world is dramatically sold off. Any other specific questions? I think we got a pretty good plan ahead. Probably we won't be bearish on the TLT. I do regret doing that. It's just this chart is just so absurd. The whole bond situation is so absurd. And my take on this is that the people who are in these positions are continuing to drive those prices lower and lower, despite the Fed not giving us any clues whatsoever. Normally, they're giving us all these little hints, these little TV clips, almost as if it's orchestrated, telling us what's going to happen before it happens. And so trying to predict the Fed's moves since February, I'd say February was the big surprise, because in December, it was, literally the wording was autopilot, quantitative tightening, and rate hikes. By February, the stance had completely changed. July, we got our first rate cut. So we're expecting to see some hints that they're going to try to get the federal funds rate closer to where these bonds are trading at. But they haven't really hinted at that at all. In fact, I've seen some rather hawkish comments. So I don't know if they're trying to catch us off guard, if they're, who knows what's going to happen here. So certainly this chart is alarming, to say the least. But I suspect that they are going to continue to drive these bond prices higher until they get the bailout. So we'll see when exactly. We may be a good 6 to 12 months out before we see the Federal Reserve actually say, all right, we're going to launch an official QE. Now, we have seen them try to manipulate that yield curve by pumping some $15 billion into the 10-year last month, which wasn't announced, wasn't discussed. So it'll be interesting to see when the Q&A comes up for the next FOMC meeting, what their explanation is for that. And if there's, if the next report shows more bond purchasing. The other big picture is, can Trump get a huge infrastructure deal and really blow out this deficit? Because that will goose up the GDP and also help this bubble continue to expand. What about you, Karen? How's your experience been so far with the program? What are you, a couple weeks in now?
Yeah, a couple weeks, and I with the storm, not knowing if I was going to have power access or whatever, I kind of stepped aside a little bit the last couple days. But now I do have a question, and I just have a challenge for you regarding this time of peace that you're thinking that we're going to have. I'm not so sure. That, what happened in Hong Kong, for instance, overnight, that's one of 5 of the criteria. And I'm not believing it. I'm kind of thinking it's a bit of an algo thing. And I just don't believe it. There's more coming. And I just think there's a lot of instability. I think there's a lot of stuff that people aren't reading. And there's some stuff in the journal talking about some of these things that have not been addressed. And I just think there's a lot of stuff simmering that we're not hearing about. I also have some friends. I have friends in the military that they're not believing a lot of this stuff either. They think that this actually will wind up being worse and not better. So.
Sure, but so here's here's what I would say to that. So first of all, the rhetoric from Trump, you can clearly see he's not caving in any way, shape, or form.
No,
But
exactly.
he's already laid out what he's going to do. So we already have a pretty good idea of what we're going to do. So that's number one. I don't think it's coming to an end either.
Nope.
But a few big things. One, here's the rhetoric from Trump. So clearly, every single opportunity he has a press, he is continuing to, hey, Ernest, how's it going? Ernest just jumped in. So yeah, the trade rhetoric has not ended in any degree on the U.S. side, but the threats have stopped. So we know what's going to happen. We know when it's going to happen. So I don't see any surprises between now and then without some sort of aggravation from China. China is having a huge celebration, which is why I think they're going to be careful. And also, for them to remove the extradition bill is a huge sign that they are. Let's see. I think Murray, if you want to chat, let me know. I muted you just because your mic was making some noise. But let's go look at this timeline again. You got to realize how slow this all plays out. And so if we jump the gun, we may miss out on a huge equity rally because we have all the central banks lowering rates. We have enough fear and uncertainty in the market because of these threats for them to really reduce rates, even buy up startup QE around the world. So I don't want to miss out on a huge rally in equities during a period where I think there's low probability of the trade war escalating. So for them to remove the extradition bill is a huge sign that China does want to ease tensions. They're also doing a big celebration. So the last thing they need is bloodshed on the streets in Hong Kong, right as they're trying to celebrate how great they are. Meanwhile, the real actions of China have not been very aggressive. It's been very slow. It's been their goal has been really to draw this out as long as possible and to change their business model as little as possible. They've done a good job at it. We can look at this timeline, and you can see it's just been drawn out. Even these threats against Huawei, they started by arresting their CFO back in December of 2018. This has gotten nowhere. None of the sanctions are really imposed. Nothing's happened to that lady. She's just in custody. And so I do think this is going to be drawn out much longer. Now, Trump is the one who really needs to, A, win an election, but B, he doesn't want to ruin the retail sales on Christmas, which we know because he delayed all these tariffs just to avoid that. So I think it's highly unlikely that we will see escalation in the near term, which is why I'm positioning us to benefit from a big move to the upside in stocks. Now, normally that would cause bonds to sell off a little bit, but it looks like the big picture is that money is just flooding into all U.S. products. So I'm going to be most likely not doing another bearish trade on the TLT tomorrow. So we'll walk away with either probably a break even or a small loss on that TLT unless we get a little more of a sell off on it, and then have to remain long the TLT because that's what will really help us when the surprise escalation does occur. So I do think the trade war will escalate, but the caveat is, number one, if China were to come up with a farming purchase, that would be a game changer. That would help Trump win the election. I think he would cave in on some of his demands and potentially push us down the road. Now, if the Chinese continue this path of not doing anything, dragging their feet, nodding their head, pretending they're going to do this and then just not doing any of it, well, then certainly I would suspect trade war escalates. So yeah, I agree with you, but the extradition bill is really what caused the Hong Kong protests. The rest of the four demands are related to primarily what happened after the protest began. So I bet the 1,000 people they arrested will get released, and they'll just push this task down the road. And they also got Taiwan, throwing parades. Last thing they want is now their own people to start revolting. At a time where they may be having pressure on their jobs market as all these companies slowly but surely move out and don't come back. So you're right, it's definitely hard to predict. That's why it's so important to have our balanced portfolio. And I definitely think my trade alert last Thursday on TLT was a mistake, having it be a little bit bearish. So we'll probably most likely go back to a wide collar on the TLT until, this is a funny thing, what might cause the bond market to have a considerable sell-off will actually be when they come in with the QE and start to peg these rates. And so that'll be whatever price all these speculators can get out at. And then, who knows where exactly they're going to peg that rate. Will it be anywhere near where they've pushed these rates to now? Will it be a little bit higher? We'll see. But that's when I'll probably become less constructive on the TLT, is once we finally do get QE. But, when will they really launch QE? We may not be anywhere near that. Maybe we get a 25 basis point cut September. Maybe we get some of these surprise bond purchases that they haven't really discussed. I don't think we're going to see QE until they really escalate the trade war. So we'll see. It's definitely hard to predict what either of these parties will do. Okay, I unmuted everybody again in case you wanted to chat. Murray, what are you thinking, buddy?
I wanted to review your change to silver versus Facebook, the timing on that, or what was the detail on that?
Oh, sure. Yeah, so we rotated into Facebook out of silver because I was expecting a de-escalation period in the trade war. So my plan for the Tuesday trade is to essentially right now, because stocks had just experienced a sell-off due to the latest escalation, what I'm basically expecting are these periods of escalation followed by periods of de-escalation. Because if they just escalate too much, it's all going to blow up, and that won't benefit anyone. So I don't think Trump will escalate at such a pace that it completely cripples the U.S. equity market. So we got the escalation that I'd been expecting since June. Granted, I was way early, about 45 days early, which did cause us a 1% loss in July. But we were right. We had the right fear, the right big idea. So we were protected at all times. And so, Karen, I realize there's this unexpected risk. That's why we have the put options. So expect, as long as the trade war is in a period of de-escalation, which I believe we are in, that we will see something like Facebook rally faster than the SPY. I like Facebook because it has no direct business in China. So if the trade war does escalate, it's not really going to impact its numbers. They have a complete monopoly on the social media space, and also just in general in phone apps. They dominate 3 of the most used phone apps in the world. There's some Chinese competitors and there's a few YouTube apps, but other than that, the usage drops off a cliff. So they have a pretty clear monopoly in a space that's hard to deem with antitrust laws as a monopoly, because they give it away free. So you can't say they're trying to take advantage of people. So maybe they'll get slapped with fines here and there. But we just had a $5 billion fine on Facebook, which created a pretty nice sell-off on it. So I like Facebook going into this period. Now, once we get to what I call, scary levels in equities valuations, that'd be around the 300 mark in the SPY. Above 300 in the SPY, I'm calling the danger zone. I don't think the SPY can break out of a range between 300 and 330 with all the free money in the world if there's this back and forth escalation in the trade war. So my expectation is we will get back to highs. Trump will get confident. He'll wait till after sometime around this Christmas period. And maybe I'm a month early again. Maybe it's January or February that he's going to put the next big punch into the trade war. Anyway, I like Facebook until we get to about 300 on the SPY. Once we enter what I call the danger zone, I want to own a stock for the Tuesday play that's not so volatile. The least volatile stock that can still appreciate and provide good income for us is Microsoft. So we'll rotate to Microsoft at these danger zone price levels. Once we get towards the top range of what I think is possible for the SPY, I'm going to rotate us back into silver. We'll probably have to hang on to a little volatility in silver prices. And then we're going to expect that the trade war does escalate. So at that point, that's when we could see silver punch to new highs. So that's kind of my plan if everything I'm seeing plays out exactly. Now, there's really the big thing I'm looking for is, will the Chinese buy farming goods? If they'll buy farming goods, this really changes the outlook, at least for the short term, and maybe even through the election period, all the way towards the end of 2020. If they won't buy farm goods, our exact outlook continues to remain intact. So it's funny, you know, buy some freaking soybeans and all these problems disappeared to a great degree for the markets. Don't buy soybeans and pork, and this thing could potentially dramatically escalate. Now, when will Trump really escalate it? You know, I don't know. It's really hard to predict. But I do believe he will do it. And every little chance he gets to go into the media, he reminds people he is the quote unquote chosen one to fight China. So, so that's the plan for the Tuesday trade. Now, I do think there'll be a great opportunity to get into Apple. I like Apple a lot, but realize they have 30% of their business in China, and they have 1 million employees in China manufacturing these phones. So their impact, if the Chinese really wanted to retaliate, I don't think the Chinese have really retaliated right now. They've done a great job kind of playing, what was that famous fight? Was it Joe Frazier versus Muhammad Ali? You know, Joe's over there pounding the hell out of Muhammad. He's just dodging bullets left and right until he outlasts him. So I think that's kind of what China's trying to do. They're trying to take the punches and survive. Because if they can survive, they feel they have everything they need to become the next superpower in the next several decades. Which I think they want to continue to take advantage of open societies. They want to keep stealing technology, rebuilding it for their economy and for their people. They want to take over the Eurasia landmass, build their Belt and Road, and if that means breaking parts with the West, I think they're all right with that. And so the big question is, can they take the punches until they get to that point? So yeah, it's a fascinating story that's unraveling, and we get to watch it. And yeah, that's pretty much. Oh, let's see, we got William in there. Hey, William, how's it going? I unmuted your chat there.
Hi.
How's it going?
Well, I walked away. I was listening to the first segment, walked away for about 10 minutes, came back, and it just transitioned into last week's thing, and I was lost. I just woke up to the fact that I came over here. So anyway, I just love everything. Thanks.
Oh, great. Well, hey, I appreciate the kind words. So yeah, the live stream you can replay. There's a little bar on the bottom of the video, so if you want to rewind it, I definitely highly recommend it. So it's kind of funny. The content we provide does allow people to get the general idea of what we're predicting, and we've been very spot on. You know, outside of being a little early on the predictions, which can be very difficult. Timing is always the hardest part. But I know for a fact, just because Dean likes to rub it in my face, he'll take my calls and then increase the risk by like tenfold and tell me about all these big gains he's getting. But from our point of view, we're not trying to risk huge amounts of capital and take the risk of a big loss. So
Now there's an idea. You can do a little competition between you and Dean and see who's running a better portfolio.
well, he's just taking my trade ideas and buying call options. So
You know, one be more aggressive and one be a little bit more, you know, not. I think it's kind of it's interesting, you know.
no,
because
you know
yours
what?
is-
I used to actually provide the speculative trading advisories. It was a lot of
Yeah.
fun. I had a great time with it.
Yeah,
But
'cause
what I
you're the
come to
steady
find
Eddie, you
is
know?
that the people who actually will pay for our advice
Yep.
have no business being speculators.
Yeah.
They're well past that point in their life. They've got a lot of savings. They don't need to make huge gains to be comfortable. So yeah, it took me a good decade to realize just that we needed a nice conservative, paranoid Pete portfolio versus what's a fun aggressive Andrea portfolio. No, I don't know. So yeah, the live streams are very good. I spend a lot of time on that. You can chat with me live on that as well. So definitely take advantage of those. The Zoom webinar will be our opportunity to kind of just chat amongst our paid member group and talk shop basically.
Yeah, I
Yeah,
like your
I
Tuesday
think
trade. I'm
Thursday
starting to
play,
work
guys, we're
on.
going to go back long TLT. It's just so insane. I'm not the only guy who's been paranoid about this. Ray Dalio's famous fund was trying to short the bond market this year, losing. Jeffrey Gundlach, the new bond king,
Mhm.
he's been trying to short the bond market. I will never forget, he was saying, let's go back to that TLT chart. When it hit, I think it was right here. I have to go back. The second it hit 135, he wrote out a comment about how this was exactly the price we had hit in 2016, saying that it was going all the way to zero and it was the very bottom, and that buyer's remorse would sink in shortly after. And clearly, we had a huge run just in the last 30 days. And so the situation is much more dire than 2016. 2015, 2016 is the last time the Chinese devalued their currency. They were facing a slowdown, and their solution was this whole massive build out of the housing, which nobody lives in, just concrete silos that are getting flipped amongst one another. So they built too much housing. I forgot, there's something like, there's like several houses built for every single person in China. It's something absolutely insane, and none of it's being used. So it's just going to sit there and depreciate. So now they're trying to take all their capital and leverage it into the Belt and Road. So that's what they're good at. They're good at construction, they're good at manufacturing. But now their debt to GDP is at 300%, much worse than 2016. And we weren't trying to apply a bunch of pressure on them in the Obama era. So in 2015, 2016, they almost blew up their economy all on their own, went and expanded their credit dramatically. And now here we are, they're devaluing their currency more rapidly than ever before. Plus, they're facing massive economic pressure from the US. So quite frankly, they might go belly up. Oh, here's something I did want to show you guys that I've slightly optimized. So right now, I still have you guys holding 10% in gold, even though we have this period of peace. So this will probably be, well, the meeting in September, if that's a little more dovish than people expect, that's a good reason to be long our gold, as well as all these other central banks. If they start announcing QE or showing signs of QE or dramatic rate cuts, which I showed you, almost every country in the world is cutting rates quickly right now. And here's just a cool zero hedge piece where I screenshotted all these different countries who are all lowering at the same time. But once we do get to these extreme levels in equities, which I think will be sometime around Christmas, maybe even into January. I'm going to look for the opportunity. I found a better way, or at least an easier way for our members to short the equities markets. And don't get me wrong, I think at this point, the S&P 500, the Dow, and China's equities will all crash at the same time, just from different levels. So China is coming from lows, maybe getting back to a reasonable price in the next few months. US going to be most likely rocketing towards new highs. So there will be a point where we will become concerned about the SPY trade. We'll flip that collar upside down. We can't make a whole lot of money with an upside down collar on the SPY, just the same 100 to 200 bucks max per period per contract. Where we can make a really nice return though, without having to deal with put options, which I found are a little hard for people to manage, will be the Yang ETF. That's a 3 times bearish ETF on the FXI, the Chinese. It's basically just their big banks primarily. And then I like SQQ and SDAO. So I will potentially go from a 10% allocation in our buy and hold portfolio to maybe a 20% for a very short period of time. And we'll add a 10% position into these 3 ETFs. Probably 50% in the Yang, 25% in these 2. So again, if everything I have plays out exactly, here's what's going to happen. China does not buy farm goods. Fed lowers the rates, continues to sporadically buy bonds without really telling us why. China doesn't escalate. Equities rally. Gold market maybe stabilizes, maybe drifts a little higher from other central banks starting to get more dovish, maybe the ECB. We get through the Christmas period. Somewhere between December and January, that's when I think the next round of escalation occurs. And so some point in that time period is when I will say, all right, we need to become a little bit more defensive, and then we'll buy up some ETF shares that help us generate a profit to the downside without having to worry about option premium disappearing. These products essentially use put options in the futures market to deliver the same return and adjust it for you every day. So it's a little more passive and easy to follow. So we'll see if it all plays out exactly how I think. If there's any surprises along the way, we have a clear idea of what these various outcomes would look like and how to adjust the portfolio. Let's see, we got a few new people in here. John made it. Hey, John. John had a question in the live stream today, which I didn't see, so let me go over that. He said, can we roll over the position and try to get something out of that 1 penny on the put? So John, so the put option would expire today, and it's only worth a penny, so no one wants to buy that. So most likely you won't be able to sell that. Now, if it's worth 2 or 3 cents, you might be able to sell it for 1 cent less than the mid price. Now, in terms of rolling over the position, that's exactly what we do. So I am rolling over the position every Monday, Wednesday, Friday. So, but to summarize your answer, yeah, there's really no way to optimize the returns better than what I've provided in the trade alert. So, oh yeah, go ahead, and I think your mic should be working, John, if you want to. See if there's a chat box too. Yeah, so feel free to type your question or use your mic. John, you have a question? We can't hear your audio if you are speaking. So yeah, if you want to do it in a single trade, sure, I'll show you how you could have done that today. Which platform are you using? Interactive Brokers, or what are you using? Interactive brokers. Okay, cool. Yeah, I really like, you wouldn't believe it. We had a client using Robinhood who had transferred $300,000 and couldn't get a response from their support team. And he lives in San Francisco, drives over there, and the poor guy gets thrown out on the street because he's raising hell that no one will answer him about where his deposit or withdrawal had happened. So we're now only recommending Interactive brokers and not Robinhood. Now, if you do want an easy way to play a tiny position in the crypto, I like Robinhood. And we do have plenty of members who love Robinhood. But I like Interactive brokers. You can pick up the phone, talk to them. So certainly. Okay, yeah, let's take a look at how we could have put the trade into one ticket, which again won't improve the results, but it, you know, definitely a skill that's useful.
Bird's been out there. If there's some grapes, he's been pounding away on the vines out there. So if we had any grapes, he's gotten all of them.
What's that, Murray? I kind of heard you, not quite.
Yeah. Yeah, this one had sort of a gold breath. Yeah.
I think Murray might be on another call. William, go ahead. I see you have your hand raised. Go ahead and ask. So meanwhile, I'm putting up the.
Remember to add if somebody is a first responder or a veteran or military,
yeah, even better.
get free commissions at trade station.
Killer deal, isn't it?
That is a huge help. So anyway, I add that as a little thing there. And I'll keep
that's great.
reminding
I'll
you
try to
till-
remember to do that.
I'll keep reminding you till it's routine.
Okay, good. Yeah, I need to get our Interactive brokers actually pay us to refer people to them. So I need to get that set up too, which is TradeStation, right? With the free offer.
Yeah, trade station.
Okay, yeah, I love TradeStation.
Military and first responders.
Okay, cool. Yeah, we'll have to go get a deal with them. They used to pay us to, when we used to represent a pretty complex day trading program, that was the go-to platform, and we had a nice arrangement with them as well.
When you call them, ask for Peter Albino. He's my guy. Peter Albino.
Sure. Okay, great. Yeah, I need to do that. I'll try to get to that today or tomorrow.
Okay, bye.
Yeah, no problem. Okay, so yeah, so if you want to do all this in a single trade, now my goal with this program, as you can see, is, you know, investing doesn't need to be complex. If we can make our life simple, why go complicate it with just a bunch of trades that end up doing the exact same thing? So a lot of people like to build so-called diversified portfolios and go complicated with a million different securities. But at the end of the day, it's no more diversified than what we're delivering with 2 to 3 ETFs total. So in the same breath, when I do the, this thing's hiding behind the window. Sorry, let me get that trade ticket up. So I split this up into 2 tickets just so that there's little room for confusion, especially for new people, because step 1 and step 2, they don't necessarily need to follow if they haven't taken the most recent trade. But yeah, if you wanted to do this all in one trade ticket, here's how we do it. And now Interactive brokers may have a little bit different looking platform, but at the end of the day, it's going to be the same order. So this is, again, leaving out that put option that was only worth a penny. You just most likely can't sell that thing for a penny if it's only valued at a penny. So if it's valued at 2 cents, you may want to throw that in there. So I could just throw that in there if I wanted to. what was it, 289, I think. So you can see it's worth a penny. So it would be hard to get that one sold. So you would just kill that, let it expire worthless. Bingo. You can do it all in one little trade right there. William, you got your hand raised. Go ahead. You're unmuted on my end. So you can either use your mic, but you have to unmute yourself or the chat. Now, is everybody in here currently following all the trades? Or are you just doing the SPY, or where's everybody at? I know Murray's following the whole program.
I'm slowly working towards doing the whole program. I just did the GDX, and I'm looking at your Facebook, and but like I said, I'm a little bit behind, and I'm just going to catch up now because I kind of lost a week here with all this nonsense.
Yeah, you didn't want to get blown away, huh?
Yeah, well, I had 3 properties to deal with, including a parent, so it was a little busy.
Oh man. Yeah, that's a lot. Real estate's a lot of work.
Yeah.
Jason doing the SPY and the bonds as well as Facebook.
Okay, great. So you're doing it all.
No, just the buy and hold. No.
Oh, you still need the buy and hold. Okay.
Yeah, I've got precious metal positions from before, so I've kept those.
Okay, well you got the same overall strategy, so that's good.
Exactly.
Great.
I'm doing the SPY. This is Tom. I'm doing the SPY and the TLT, and just about to add more, but kind of moving slowly into it.
Okay, cool. Good to hear. Let's see, we got a question from John. But when you roll, does that mean that you're making that penny? In other words, you're getting credit for that penny. So yeah, it's exactly the same as separating it into multiple tickets. So you're not going to make any more or less. If you have a put option that you're long and it's only worth a penny, no one's going to buy that from you. I'm afraid. So you won't be able to sell that no matter what. And it's only a penny, so you're trying to save a buck on me here. No, I'm just kidding. But yeah, if I were doing this, I would do it in one ticket. Why do 2 tickets when we can do 1 ticket?
Thank you, Jason.
Yeah. Thank you, Oscar.
Great job. Thank you for guiding us.
My pleasure. I really enjoy it.
Jason Murray here. Do you want to make any general comment about corporations borrowing at negative interest rates and then buying their own stock back?
Sure. So, yeah, in fact, that's, I'm sure Murray knows this is one of my key things. I didn't realize that we had some negative yielding bonds stateside, not denominated in dollars, but so one of these macro voices folks that comes on a lot, I think it's Brent Johnson, maybe they've got one guy who's just really a bond expert. And anyways, here's some of these negative yielding bonds. What happened at some point was the banks stopped collecting foreign currencies because they're losing value too rapidly against the dollar. And so there's this big fear of a dollar shortage, which continues to drive all these up. But here we go. Here's your negative corporate bonds. And so once again, I believe that the bond market is going to maintain these bond prices, continue to push them higher, because the ones, it's these huge banks that are doing this. It's not your retail mom and pop. So they're in cahoots with all these central banks. It's supposed to be this independent bank governed by Congress. And You know, if you really look into it, it's really just another branch of the banking sector. And so, you know, what do they want? They want the central bank to eventually come in here and give them the exit. If they tried to sell the 16 trillion in negative bonds in the sovereign market, I think there's a couple trillion now in corporate debt that's negative, they wouldn't be able to get out. So they really need the central banks to come in here, start up QE. That's when I think this bond rally will, you know, funny enough, stop, and they'll peg these rates, let all the money flow out from these big banks that have been hedging their equities, and then they're going to most likely reallocate into equities. Now, the catch is, as long as this U.S.-China trade war is continuing to get hotter and hotter, you know, they're probably not going to give up this bond portfolio, even if QE were to light up. So, yeah, it's absolute insanity. You know, if you have well, for these companies, these are the best of the best that are getting to borrow at a negative rate against the euro, the franc, the krona, the yen, mostly against the euro. So we're seeing $123 billion of negative yielding debt denominated in the euro. But yeah, I think that's probably, let me get to that chart, LQD. If you have any kind of phone app that you use to track your tickers, we're not trading LQD, we're trading TLT. But LQD is really the ETF. I'll pull up the chart. Until this thing starts to show some serious weakness, the corporations are going to have access to cheap capital, at least at the top of the SPY, the top companies. And that's what's going to be hard to stop this cycle of stock buybacks. So this LQD is just insane, straight up, a lot like the TLT, even a smoother ascent. Let me pull up my bond portfolio so you can see the different instruments I'm interested for that. So we may be a long ways away from this, but looking ahead, assuming, you know, the banks lower rates close to zero, start up QE, try to save the day, we get massive inflation, they spike the rates up. You know, we go look back at the period of the 60s through the 80s where we had hyperinflation, which was caused by a period of excessive government debt spending, and of course the Cold War with Russia. So we had a lot of domestic spending at the same time as trying to fight off this threat of communism from Russia. Anyways, once we do get to very high rates and believe we're going back into a period of lowering these, this could be years from now. This is the basket of bond funds I'm very interested in building a portfolio into. So that's your core US bond, AGG, investment grade bond, ETF, LQD. If you follow Jeffrey Gundlach, and now, you know, every other bond guy just kind of mimics whatever he says. There's companies like AT&T and General Electric that hog up a huge chunk of this highly rated debt that's triple B, and they believe that this has been perhaps misrated and should be downgraded, and that might be what causes LQD to significantly sell off and cause the corporate buyback cycle to stop repeating itself. So LQD is a good one to watch. As long as it's an upward trend, it's going to be hard for the US equity market to not continue to have support, at least to maintain a decent valuation.
You know, I heard that about AT&T and GE. Well, we know GE's got issues, but you know, you think about it all these years and you go, well, if they misrated those, that's really a frightening story in the bond arena, period. You know, it makes you take a little pause in general. in that arena if, with such big companies like that. At least that's how I feel. I'm always a little bit of the skeptic on some of these things. And, you're the bond guy, that stuff more than I do, but these long standing companies, and if they, we heard some of the same nonsense back when, in 2007 and 8, and I'm thinking, here we go.
Yeah, no, yeah, we're in a big bubble. The catch is you don't want to short the bubble before it pops.
Yeah.
So, good news is, with a relatively simple strategy here, just the SPY and the TLT, there's a lot of upside ahead if the tensions remain manageable. Now, if the tensions get out of control, we may see the TLT go up and stocks have a panic. But at this point, it looks like it's just very hard to predict how ballsy is Trump going to get here to try to force a trade deal before the election. That's very hard to anticipate. So that's why it's so important to have this allocation how we have it.
Three-dimensional chess for sure.
Yeah, it is crazy. But yeah, the bond market's working the opposite of what would make sense. If someone has bad credit, they should pay a high interest rate. But the way this is working out, because of central banks manipulating the markets, we have the opposite. Now people with bad credit get lower rates because we think the central bank's going to bail them out. And so it's causing all the malinvestment to accelerate and dramatically increase the size of the bubble and the monetary supply.
And kind of the lesson, right? That's almost like the lesson learned, right? Is that they need to stop manipulating and allow markets to do what markets are supposed to do.
Yeah, yeah. But no, the banks, if you just go study the story of how the Federal Reserve was created, they went to some, what was it? I can't remember the name of this. They went to some secret island. They had code names. And the bankers got together to create a framework for how they would rule themselves and create this, Federal Reserve, but it's really just another branch of the banking system.
Mm-hmm.
So yeah, I don't think the banks are going to stop bailing themselves out. And
Nope.
so yeah, until we see the banking cartel really aggressively attacked, most likely we'll continue to live in this kind of backwards world where bad news is good news and good news is bad news. All right, guys, any last questions?
We could go on, but we won't.
Well, it's always a pleasure. Think up some good questions for next week. We got our bond play tomorrow. Probably once bitten, twice shy. Probably won't try to step in front of the railroad here again, or rather the train. We know the train's coming to a stop at some point in this bond market, but we may be quite a bit early. So expect probably a pretty wide collar tomorrow on that TLT, and also remain constructive on equities for Friday. And then we'll keep close eye on the other interesting thing for me. And again, this is way down the road. Is this Libra coming in? So there's your Bitcoin for the legitimate part of the world. If they can really get that passed, and that's not even due till next summer, but if they were, now all of a sudden Facebook has 2.6 billion people to roll out a digital currency to, and dramatically potentially increase the profit per user. So they're at a $500 billion market cap now. How high could that go with literally no competition in the next several years? So that's,
Well, see, I'm watching you on this Tuesday trade because you said if the SPY gets up to 300, you're going to change over to Microsoft. But if Libra starts, if it gets approved and it actually does what you think it's going to do, you're not going to be back in Facebook. You're going to have to jump back in that again, aren't you?
Yeah. So I'll look to, so Libra's, a positive look for Facebook over the course of several years into the future.
Okay.
For now, I like that they have a catalyst ahead to drive speculation. I like that they're insulated from China, and if you go to the whole moat around the castle, they got one hell of a moat. You see them aggressively trying to create policy to regulate themselves, and that's not because they want to be regulated; it's because they want to make it harder for competition to enter the space. So yeah, I don't see anything getting in the way of Facebook, which
Well,
makes
let's
it good.
face it, I think they don't know how to regulate themselves, so they figure if they let the government, if they throw the monkey on their back, then if they, then they have some criteria to go by. Otherwise, it's like the Wild West, I guess, when it comes to how to regulate themselves. I
Sure,
think that
yeah,
was
absolutely.
sort of a brilliant move on their part, going, hey, I don't know, you tell us. Yeah, we'll see.
Yeah, certainly. So yeah, in the short term, I just like Facebook because I think it'll go up at a faster rate than the SPY,
Yeah,
and not be impacted by the China trade war directly.
agreed.
But I do think at some point, China is going to have to potentially break up with Apple, and I think that's going to create a lot of fear within Apple. So if that happens, I would love to pick up Apple during a crisis moment.
It is really interesting because everybody thinks they can go jump into Vietnam. Vietnam does not have enough resources to handle all this stuff. We have a very large Vietnamese community in Central Florida. A lot of them went back because things got improved so much over there. But I talk to the business owners here all the time who still have family back and forth over there, and they tell me about the little corruption they've got there too. It's
Oh,
nothing.
yeah, sure.
I mean, it's nothing like China, obviously, because it's so well organized by the Communist Party over there. But it's got its own share of issues, and it's just simply impossible for everybody, to start shifting over to that little country. But it's going to be interesting to see how they diversify, in other parts of Asia on some of this stuff, and how
Oh
it's
yeah,
going
it
to.
took 30 years for China to really, fine tune the machine over there. So to
Yeah,
expect that we
yeah.
can just jump to Mexico or somewhere overnight.
Yeah, and let's face it, they still have all the human, rights, not just Hong Kong, but look what they're doing on the, over on the west side with those
And I think
supposed
what
work
would take
camps.
everybody off surprise is if China just bought some farm goods. That would dramatically change the outlook for everything. So, yep, exciting times.
Bizarre times. Thank you.
All right. Hey, pleasure as always. Thank you, everyone, for attending live today. We'll have another webinar next Wednesday. We've got the live stream daily, so try to join me on those and throw a few messages in the chat box. And we'll talk to you tomorrow.
Take care.